Welcome, everyone. Welcome to another product training session. Today, very excited to talk about the Q score. I am Fabio, founder of MenthorQ, and we're going to talk about a lot of interesting things today. So let's go over the agenda first. So we are going to introduce the importance of a very important concept, which is factor investing, and how it's finally possible for retail traders to leverage the same approach that is actually used by quantitative funds. We will show you what the Q score is, how to use it, show some examples. We will go over our screeners, and we will also go over backtesting results, strategies, and how can we create basically a strategy based on quantitative factor like the Q score. At the end of the session, we will also have a Q&A, so please send us all your questions in the comments and we will answer them at the end. All right, so let's be honest, most retail traders chase price, jump on news, and often trade without a real framework. Meanwhile, on the other side, professional traders rely on factors which are measurable signals that consistently drive price behavior across time and market regimes. These factors include things like momentum, volatility, options positionings, macro factor, and so on. They are not emotions, they are not opinions, they are actually data-backed hedges, right? Very, very important. So today we're going to talk about the MenthorQ scores, which actually brings the power of institutional factor investing directly to the retail traders for the first time. This approach is traditionally used by hedge funds and asset managers. On the left-hand side, for example, you see some of the things that they look for. They basically, when I was working with the hedge funds, they're actually creating strategies based on multiple factors, and they combine them together to be able to identify quantifiable characteristics like momentum, volatility, sentiment, positioning, and risk regimes, and so on. Now, with the Q score, you can actually access the same framework. So you don't actually have to build your models. We've done the work for you, and we're going to show you during the presentation what the Q score is and how you can use it. Each asset is scored based on multiple weighted factors to help you assess conviction, identify high probability setups, and avoid noise. The Q score can also be used to confirm your theory, your strategy, so you can use it in conjunction with your own methodology as well, and that can actually help you add additional value to your strategy. So whether you're trading crypto, stocks, indices, the Q score has been designed to give you clear data-backed analysis by looking at multiple factors. So you're not trading with emotions, you're actually trading with data and using the same approach leveraged by institutions. So how can traders use the Q score? So the Q score is not a crystal ball, is not about predicting the future, is about knowing when not to fight the conditions, right? So here is an example on how you can use the Q score in your workflow. For example, if we have AI Q scores, you could actually potentially think to size up, focus, or even act with confidence. You can also avoid forcing trades when the Q score is low and when the regime is unclear. So when you're thinking about going into a trade, you can use the Q score to confirm whether you could be on the right side of the trade or not. It can also help you to filter your trade ideas. So let's imagine that your chart looks great, but the Q score disagrees. Maybe take a second look and analyze the data further. You don't want to jump on a trade when you have conflicting data that can potentially put your position at risk. Of course, you need to combine it with your own playbook, right? So whether you're using supply and demand, trend lines, Fibonacci score, whatever indicator you use, the Q score can actually help you validate your setup. We're not here to override it. Again, if you're in the trading business, you already have a successful strategy, you already have an edge. The Q score can actually help you get that edge further and increase potentially your accuracy, increase your strategy. So it can be applied by a lot of different traders. So if you are a momentum trader, you can actually use the Q score to filter out maybe choppy setups in your strategy. If you are a reversal trader, then maybe wait for a high score to come to an exhaustion, right? So if you are using our momentum or option score, and we're going to go into details in a second, maybe you can use that to potentially find a reversal point, and we're going to show you some example. Again, the Q score does not replace your strategy. It's trying to make it smarter, make it better, and help you be more confident in your trade. So why did we develop? Because you don't need to code your own models. And we have done the work for you. We take in a lot of data, and we basically then created this score to help you basically assess the risk and profitability of your strategy. We're going to show you some example. We have some backtesting results as well. So this is what the Q score can do for you. But now let's go into the details. We're going to show you how the Q score works, and we're going to go into each of the factors that we analyze one by one. So the Q score is based on 4 factors. Currently, we have momentum, options, seasonality, and volatility. So let's go into each of them. We're going to start with our momentum score, and let's see what it represents, right? So the momentum score measures the strength and direction of an asset price trend using our proprietary quant model that is looking to analyze price action and technical indicators. The score ranges from 0, when we have 0, we have a bearish momentum, and then it goes all the way to 5, which is a bullish momentum. When we see a 3, this is a neutral, and of course, so these are kind of the ranges from 0 bearish to 5 bullish. So what does it mean? A high score can indicate a strong upward price momentum, and a low score can signal weakness or potential downside. So you can actually use this in conjunction with your momentum strategies and understand when we are in a long-term trend, or maybe when the price action is actually going to reverse. The second one is our option score. And basically what the option score does, and we do a lot of, for those who are using our gamma levels and our option models, options data is a great sentiment indicator, and it can actually reflect the sentiment of the market, the sentiment of the traders, the positioning, and basically is looking at option flow and activity. The score, again, ranges from 0 to 5, where we have 0, we have a strong bearish sentiment, and 5, we have a strong bullish sentiment coming from the option market. That indicates, so how can we use this score? It indicates if the market expectations and directional bias from option traders are confirming the trends, or maybe they are anticipating a shift in the market. And we're going to show you some really nice examples in a second. Then we have our third score, which is the seasonality score. We do seasonality a little bit different from the traditional way of looking at seasonality, but we do look at historical price performance over a specific time frame, typically the last 20 years of data, if data is available. And what the seasonality score is looking to do is looking to predict the next 5 days of price action. So we are looking at the past to potentially predict the future. The score goes from -5, which is bearish seasonality, to +5, which is bullish seasonality. When we see a 0, it means that there is not a significant seasonal trend. So maybe the indicator does not provide a significant signal, but we need to look for the change in seasonality as well. So the idea behind the seasonality is actually looking at past data to potentially determine when we could be in a potential bullish or bearish price trend and price movement. And then the last one is our volatility score. Volatility is very key, especially for options trader and for momentum traders and future traders. And basically, it measures the magnitude of recent price fluctuation to indicate whether we are in a high volatility environment or a low volatility environment. The score goes from 0, where we see a low volatility or a calm market, so we are in a very low volatile market, or a 5, which is a high volatility, where we're going to see large price swings. The volatility score is basically is telling us whether we are in a low volatility environment that can actually favor trend following strategies, or if we are in a high volatility environment, maybe that can actually be a good time to potentially look at selling premiums and looking at option strategies. So again, you can use the volatility to adjust your strategy based on whether you are a directional trader or an option trader, and so on. So how can you use it as a trader? So the Q score combines these 4 factors into a structured quantitative framework to provide a view of an asset. So whenever you log into our dashboard, you're going to immediately see our Q score, and you're going to get a glance in less than 30 seconds on where the asset stands, whether we are in a bullish or bearish bias, and whether we are in a high and low volatility environment. You can use it to confirm trends, identify seasonal patterns, or adjust your strategy based on volatility regimes, and so on. So if you are, for example, a futures trader and you have very, very tight stop loss, and you see that the volatility score on NQ or ES is getting higher, then maybe you also want to adjust your risk management, because you might be chopped out very fast given that the volatility is increasing. And then finally, it can help you support for time entries and exit, help you refine the strategy by integrating momentum, seasonality, and volatility, and of course, option positioning. All right, so who is the Q score for, and what type of trader can use it? So the Q score was designed to support various types of investors and traders. The swing traders can use the Q score to identify favorable entry points. We're going to show you some examples. We also did some really cool examples last week on our session on swing trading models. If you are an option trader, you can use the Q score to understand market sentiment and positioning from the option market, and it can help you identify bullish or bearish setups. If you are a futures trader, you can use the Q score to set tighter stops, avoid trades when scores are not favorable for your trading style, and managing risk in volatile markets. And then finally, if you're a longer-term position trader, you can also use the Q score to identify assets that can potentially have a strong trend, and can also identify, for example, when we are seeing strong performance. And you can also use the Q score to actually manage your active portfolio. So if you see changes in the Q score on your long-term positions, then you can also adjust your risk accordingly based on that.